Hi smart investors, I'm Elliot Ritchie and very soon I'll be heading to Sydney, Australia for a couple of interviews. The first of those interviews will be with Alex Barrat from Stake. Now if you haven't heard of Stake, Stake are a $0 commission trading platform here in Australia with clients from all around the world. It's an excellent place to start your trading adventure and start to build up your portfolio. Of course I'm going to be talking to Alex a little bit about himself, what's been happening with the markets, and of course what we can expect to see from Stake in the future. So let's get to the interview. If you're a Stake customer, then you probably received an email from Alex with insights into the market for the week. So I've got a few questions for Alex, and I just wanted you to maybe share a little bit of an insight as to yourself and how you've gone here at Stake for the last 4 years and being the third member.
Sure. So thank you very much for having me, Elliot. I've been watching a lot of your content for a little while now. As you started off, I started working for Stake as an intern about 4 years ago, and I think there are only a handful of people that were here before that are still here today. Interned a couple of days a week through uni, doing a lot of customer service. Then I grew into more of a market analysis role, writing a lot of content about markets, what's happening in markets, and similar sort of things. I started full time about 5 months ago now, and I'm doing a lot of the same stuff, talking about what's happening in markets, insights into markets, looking at a lot of the trade data our customers outputting, and seeing if there's any interesting things happening there.
Excellent. Now, for those who don't know, what's AusBiz and what's your involvement with them?
Sure. So AusBiz is one of Australia's newest financial media. I call them a company. They've got daily streams talking both the US market before and after the session, and then specifically ASX during market hours. It's actually owned by David Koch from Sunrise.
Right.
And it started off every morning, and now it's once a week. Get on there and talk about what exactly is happening on the US markets, and on top of that, what Stake customers are trading and what insights come of that.
Is that live?
Yeah, it is live. So started off when I did it daily, it'd be 8:30 every morning. Now once a week, it's just after 9. Stream live to Australia.
Gosh, that's a lot of pressure for them to put on you. Volunteering and donating to charities is obviously hugely rewarding. I know that's something that's a big part of your life. What are you actively involved in at the moment?
I suppose the primary thing, and something I only just started recently, is blood donation. Specifically plasma. I started it because my girlfriend did, and she got me into that a few months ago, so I've been doing that, and we're actually trying to get that going in the office to see if more people will do that. I suppose in my past as well, I've worked in projects like a cricket project where we gathered a lot of cricket gear and sent it to Uganda in association with Bankstown Cricket Club. So I suppose that was one of my bigger projects when I was a bit younger.
Oh, that's fantastic. I used to donate regularly as well, doing plasma.
Okay.
I don't have the build to do platelets. They obviously cost them like $150 for the kit to do platelet donations. So I was doing the plasma every couple of weeks and got the track marks to prove it. But yeah, no, it's very rewarding. With over 300,000 traders in Australia, UK, Brazil, and New Zealand, what's next for Stake?
Yeah, so I suppose most recently we launched our SMSF product. It's still in beta mode. It's been active and open for about a month now, and it's pretty much allowing users, just like we did with stocks, by providing a brokerage-free option to trade your stocks. It's providing a lower cost option to run your own super fund. I think we cut out maybe 60-70% of the cost with the existing options, and we also made it a lot more cleaner. So you can come to Stake, sign up and set up your own super fund. We handle all the paperwork with the ATO. We set up the trading account, the bank account, and register all the necessary entities.
And don't forget the W8 BEN form.
And the W8 BEN form, of course, as we do as well for US equities trading. So I suppose that's the next project for Stake. On top of that, expanding to new parts of the world. We're active in Brazil, but eventually that will become South America. We're active in the UK, but eventually that will become Europe.
Fantastic. Do you have many competitors already giving away zero commission trades in South America and Europe?
Yeah, I think it's a global trend now. I mean, we were the first in Australia to do it, and one of the first outside of the US. Of course, Robinhood led the charge, I suppose, in America.
Yeah.
But very quickly, I'd say, end of 2019, and we were starting in 2017. By the end of 2019, most brokerages in the world went to commission free. Charles Schwab was probably the biggest, and then after that, a lot of the startups, the fintechs, opened their own businesses, much like Stake did, and there are a few that exist in Brazil at the moment, and of course the UK, and a few recently in New Zealand as well.
Excellent. When I was a broker about 9 years ago, we would always say, it's a race to zero, and the race has already arrived.
Exactly. I don't think there'd be many options where you're paying at most more than $5 to trade in the world anymore.
Yeah. Unless you go through ComSec.
Exactly.
What other features can we expect to see on the platform in the near future? I know I'd love to see a trading platform, maybe margin trading, and possibly even good until cancelled orders.
Yeah, I suppose we don't have a timeline on when these features will be delivered, but it's definitely something we've spoken about and plan to implement. More advanced charting, as you mentioned, probably a deeper buy-sell function to mimic more of a trading-like platform. And definitely margin accounts, there's no timeline on it, but wouldn't be surprising to see that unrolled at some time, as well as different sort of markets apart from the US.
Okay, well that's pretty exciting.
Yeah, so not sure when it will happen, but the discussions have started, I suppose.
Yeah, that's something I'd be definitely keen for, because I've got no exposure really to the European markets. Asian markets, we're very limited. We can only really access ETFs, I guess, through the US market. With current concerns amongst investors throughout the world, concerned with inflation rising in the United States, what do you expect to see for the market in the near term? Do you think a bear market is coming?
If not a bear market, I think we'll see segmented returns in the market. So some sectors will start to do well, which may not have performed for quite some time, and some of the more dominant sectors like tech, like consumer discretionary, will probably enjoy, or will not enjoy, but endure a more quiet period. So even if we don't go into full bear market-wide, we can see recently the S&P 500 has been pretty stable, but if you break that down, the leading sectors have been financials, they've been energy, they've been materials, which are probably more inflation and interest rate sensitive sectors, but over the last 3 months, in fact, S&P 500 technology, S&P 500 consumer discretionary have done the worst. So that's all wrapped up into the headline S&P figure, which is flat, but we see definitely two different worlds in that. So I think for the next little while, the sectors like financials, materials will continue to perform, and I suppose we'll see if IT, if consumer discretionary goes the other way.
Yeah, tech has definitely been overbought for last year, and it's just kind of having a serious pullback now, and I think it's probably a little bit oversold for where it's at. There's so many great companies in the world, and they're all kind of tech related. They've all got some sort of technology behind them. So I guess, it's anyone's guess at this point what's going to happen. Which industries do you expect to grow within the next 3 years? What are you looking at, and what kind of stocks are you focused on that you'd recommend to people?
I suppose the most straightforward answer, and I don't think it's an uncommon answer, is renewables. I suppose the best thing to happen to the renewables space recently has been the Biden presidency, especially compared to the status quo before that. And there's billions of dollars in investment now going into that sector. In particular, a lot of the solar companies, they've seen on Stake an increase in investment as well. And of course, it's retail interest rather than institutional, but I'm sure the institutional investors are feeling the same thing, especially as a lot of countries now are switching towards 2030, 2050 targets. I suppose the biggest example of an increased interest in renewables is the EV boom. And I think a lot of that was driven by Tesla, and whether that was linked to fundamentals is a different question. But it shows an interest in these companies that are changing the future. We look at ARCs, ETFs, which are the disruptors, and they have a lot of companies linked to clean energy, a lot of companies linked to more renewable future, and they've been very popular, not only amongst traders, but their returns have indicated that people really believe in what they're selling.
Yeah, I love ARC Invest. They do a fantastic job, but they have had a massive pullback after the last couple of months.
I see some of their analysis, and I'm not convinced entirely that. I think what they put out to the public and what they really believe are two different things, but we see they increase their price target on Tesla to $3,500 and it involves them running a new insurance business, which is meant to become the biggest insurance company in the world, and having a fully autonomous taxi network. And I don't think that's as likely as their analysis might make out, but what they tell people and what they actually believe, I think, are two different things.
Yeah, that's fair. I mean, the autonomous vehicles has not happened yet. I mean, it's still not proven that it's viable and that'll work. I saw recently there's a guy who is sitting in the back of his Tesla and he keeps getting arrested by the police because he keeps driving in autopilot mode, which is against the law.
Yeah.
To still be in front of the steering wheel.
That's interesting. I mean, I think I've seen videos of Elon, and of course I'm a fan of Elon Musk, he's done very good things, but every year since 2014 he's come out and said, next year we're having fully autonomous vehicles, next year we're having fully autonomous vehicles, and it's been 7-8 years since he first made that claim.
Yeah. If you're starting out with $10,000, how would you distribute those funds?
I think there's two things to consider first. Firstly, what's your timeline? Because over 30 years, over 40 years, over 50 years, $10,000 can turn into a lot of money. So first, consider your timeline. Secondly, consider your risk tolerance. Are you willing to lose $10,000 by the end of next year, or do you want to sort of contain that and hope to see that grow over the future, be very risk averse? So if you're more risk averse and you have a long period of time, I think there's nothing better than putting that in an index fund. I mean, if you start with a 10K, say put half in the S&P, half in the NASDAQ, or some other mix, and you add 2K to it every year, with the index's average return of 8%, that should become over 300 grand over 30 years. So, of course, you have to pay taxes on that, you have to figure in inflation, but that's a good return for a lot of people, and there's not much stress to that as long as you keep adding to it, commit to a long period of time. If you were wanting to take a bit more risk, maybe accelerate that process, I'd still put some in index fund, put in 5K, but then use the other 5K to try and teach yourself to stock pick. It's easier said than done, and it takes a lot of time to be able to stock pick successfully, if even possible. A lot of people argue that you can't pick stocks and beat the market over a long period of time, and they may be right, they may not, but I think a lot of people have made excess returns in a short period of time. But picking an investment strategy to pick stocks, be it technical analysis, be it following a mentor who succeeds in value analysis, fundamental analysis, and taking some time, and it will be a 2 or 3 year process, but using some of those funds to practice and hopefully one day become good at stock picking. And of course you always got that bit on the side in the index fund that will provide a cushion. Yeah,
definitely. Myself included, I've often diversified too much in buying too many different stocks, and it seems like it's okay at the time, but once you've got 10, 20 stocks, it became extremely hard to manage because you're just not following those companies as well as you should be. You're not following the price movement as much, and it just can become overwhelming, and you just kind of flounder and just watch it all dissipate at times where it's bad and you can't manage it properly.
I saw an interview with Stan Druckenmiller recently, and there were two main points that stood out for me. The first one was, as you mentioned, the more diversified you are, the more risky you could become, and that's if you have 10, 20 positions and you can't properly monitor them completely, actually increases the risk on yourself, because there could be announcements, could be changes, and you can't really be sure that you're investing in the business you were when you first bought the stock. And the second thing he pointed out was, if you're confident in something, make a bigger bet than, or a disproportionate bet to what you usually would. And I mean, we saw it with George Soros. He made his billions by making one of the biggest bets in the world on the shorting the British pound. We've seen it with Buffett, we've seen it with Druckenmiller himself. When they're confident on something, they don't go all in, but they put a bigger bet than they usually would on it. And if his hypothesis that the more diversified you are, the more risky you could become is true as well, you can understand why that makes sense.
What are some of the most important lessons you've learned since working at Stake?
Speaking to Matt, our CEO, who taught me a lot of what I know about trading, about investing, one of those is to pick your strategy and sort of specialize. You don't have to be right every time, but if you work on the same strategy and you hone that strategy, and over 4, 5, 10 years become an expert in that strategy, it's a lot more worthwhile than being a value investor at the beginning of the week, a technical trader at the end of the week. Whatever you do, make sure you stick to it and become good at it rather than spreading your skills across many different investment styles. Another piece of advice he gives is that I definitely think is true, and I've seen it now, is don't sell a company that's still growing. So if there's a company and it's growing 40% every year and that becomes 50% next year, 60% the year after, hold on to it. They must be doing something right at that company. And I think that's a very worthwhile piece of advice, and I think it's true for Stake as well. I think we're compounding our growth. So business-wise, it's good to stick around when the company's still growing.
Yeah, couldn't agree more. I sold out of Tesla at 800 before the stock split.
And it's what, 4x times that?
Yeah, pretty much. Yeah.
Well, I don't think I've ever traded Tesla because it's always been, it's too hot, which is surprising because I've traded most stocks on Stake. But yeah, I don't feel any regret. I'm like, there's going to be another one sometime.
Absolutely. These things come and go, and if you get worried about a specific company or that trade you missed, you're not really developing the skills that allows you to get in and out of trades.
Exactly.
Over the long term. Now, I've got an extra question for you. You would see a lot of the data coming through from your customers trading. Are there traders that you just know that they're just hitting it every time and they're just worth following, or is it a bit mixed, or how do you utilize that data here at Stake?
Yeah, I think the data is a bit more protected than that, as in we don't know who it is or who specifically is making the trades, just for privacy reasons, but get to see the volumes and the most traded sort of stocks, and it typically tends to be the same stocks at the top. Tesla's number one more often than not. I think Neo is the only stock to displace that at number one over the past year and a half. Then it's the Microsofts, the Apples, the Amazons, which have sort of become the bottom drawer stocks for a lot of people, where I suppose 10, 20, 30 years ago, our parents would have had CBA put in the bottom drawer, kept it for 50 years. Now it's stocks like Microsoft where people are more willing to hold on to it for a long period of time, and we're seeing a lot of people just drip money into those sort of FANG stocks month over month. I suppose when the paycheck comes in, they'll put in $500 to those sort of stocks, and they've become their long-term holds, which is why they're always so popular at the top of our most traded lists. On top of that, momentum is a very popular strategy. We see the hot stocks become more popular the higher their returns. So I suppose we look at stocks like GME, as it rose in price, the interest in that stock rose as well, and that's true every week. Whatever stock's hot, it sees more and more investors, and it makes sense. I suppose the more active traders are more represented in those figures, so as soon as they latch onto a stock, it's in our top 10, top 20 most traded.
Thanks, Alex, for joining me today. I really appreciate the insight and you taking the time out of your busy schedule to fit me in for a quick interview. So thanks for that.
Of course. Thank you very much, Elliot. I enjoyed that.
Thanks, Alex. I'll see you guys on the next video. Keep investing. See ya.